Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Wednesday, December 22nd, and we do got some pretty big economic news releases today. And just take a look at the GDP. Came in a little bit higher than the previous revision. This is actually the third revision, the final revision for the GDP for the third quarter. And it came in a little higher than the prior estimate, but not as high as the estimates came in. And that GDP, actually, the number came up higher due to companies having historically low inventories and basically replenishing those inventories. So it's not a good reason why the GDP is up high. So we're cautionary. GDP deflator came in lower than anticipated, even from the prior month. And then existing home sales up a little bit, so that's kind of nice. This is for November. Came in at 4.68 million, so a little bit higher than estimate and higher than the previous month. So that was pretty good, especially considering that but it's down year over year. But considering that year over year, you're looking at tax credit incentives. So people, especially at this time of year last year, people are quickly trying to get last minute uh, their houses, so they can get the tax credit, which was supposed to expire last November. So then it got extended, of course, to May. And let's take a look here. We got the FHFA Home Price Index. So again, that was up a little bit. That was also kind of nice to see, 0.7%. Year over year, it's down, but that 1 month increase, it did show prices go up slightly. You mean home prices. And then technicals, the stock market's up a little bit. So let's see what this translates to the bond market. If we take a look at the bond market, we had a little yesterday. We were going down a bit, and then we kind of rallied and came back. We're kind of hovering right around the 10-day moving average right now, so we're kind of looking at this sideways movement here. So this could be a good breakout for us. So right now we've been kind of developing this upward trend the last week. If you kind of look at here, we're down and we came up here. The greens are up and it came down a little bit here, which we kind of needed to correct because if I remember right, we started up here and basically we're up like 25 basis points. So we had this opening gap. So we closed that gap here. And then yesterday we had, we were right in the range. Now we're kind of in sideways motion. So we started the day down about 13 basis points from where we left off yesterday. And currently we're down another 16, so we're down about 29 basis points. But if we can keep within this range here, we could potentially hold it, and you can see a nice jump upwards. We could be probably in the 100 to 101 range here because we got all this room in between here. We want to keep it above, obviously, the 98.5% range. This is kind of looking like more of a support here. So if we keep in this range, we could see a lot more growth here for improvements in the interest rates. All right, folks. So as of today, rates probably about the same or maybe slightly worse than yesterday's where they left off, depending on where the pricing came in, and then also how lenders priced if they did a reprice yesterday. So if they didn't do a reprice yesterday, it might be about the same. You guys have a great day, and anything else changes, I'll keep you up to date. Have a good day.